Hey there, and welcome back to our channel. If you're new here, I'm your name, and today we're diving into a fundamental topic that can help you take control of your financial future: savings accounts. Whether you're saving for a rainy day, a dream vacation, or your education, understanding how savings accounts work is essential. So, let's get started. So, what exactly is a savings account, and how does it work? Let's break it down. A savings account is a type of deposit account offered by banks and credit unions that allows you to store your money while earning interest on it. Think of it as a safe haven for your cash, where it can grow over time without the risks associated with investing in the stock market. But how does it really work? Let's explore. First off, opening a savings account is pretty straightforward. You usually need to provide some personal information, like your name, address, social security number, and a form of identification. Once your account is set up, you can deposit money into it. Most banks have a minimum deposit requirement, which can vary from as little as $1 to a few $100s. Once you've deposited your money, you can add to it anytime. This flexibility makes savings accounts an excellent option for both short-term and long-term savings goals. Now, let's talk about interest. Savings accounts typically offer interest rates, which is a percentage of your balance that the bank pays you for keeping your money with them. For example, if you have $1,000 in your savings account with an annual interest rate of 1%, you'd earn $10 in interest over a year. Though it might not sound like a lot, every dollar counts. Interest on savings accounts is usually compounded, meaning you earn interest not just on the money you deposited, but also on the interest that accumulates. This process can significantly increase your earnings over time, especially if you keep your money in the account for several years. For instance, let's say you deposit $1,000 in a savings account with a 1% interest rate and leave it untouched for 10 years. With compounding, you would end up with about $1,100. That's an additional $100 for doing nothing but saving. Of course, interest rates can vary widely, with some banks offering higher rates to attract customers. Online banks often provide better rates than traditional brick-and-mortar banks, so it's worth shopping around. However, it's essential to be aware of fees that some banks may charge. Monthly maintenance fees can eat into your savings if you're not careful. Some banks waive these fees if you maintain a minimum balance, so always read the fine print before choosing an account. Another advantage of savings accounts is the accessibility of your funds. You can withdraw money or transfer it to your checking account at any time, although some banks may limit the number of withdrawals you can make each month. This feature makes savings accounts a great tool for emergency funds, which financial experts recommend having to cover 3 to 6 months of expenses. Now, let's consider some practical examples of how you might use a savings account. Say you're saving for a vacation. By setting aside a small amount each month in your savings account, you can watch your funds grow while earning a bit of interest. Or perhaps you're saving for a down payment on a house. A dedicated savings account can help you stay focused on your goal. In fact, many people use savings accounts to prepare for life's unexpected moments. Whether it's a car repair, medical expenses, or even a job loss, having a financial cushion can provide peace of mind. To summarize, a savings account is a secure and simple way to store your money while earning interest over time. It's a great tool for achieving your financial goals, whether big or small. Just remember to shop around for the best interest rates, be mindful of fees, and consider using it for emergency savings. If you found this video helpful, give it a thumbs up. And don't forget to subscribe for more tips on personal finance. Have questions about savings accounts or any other financial topic? Drop them in the comments below, and I'd love to help out. Until next time, happy saving.